Good afternoon, everyone, and welcome to Park Edge Advisors October Market Insights. I'm Matt Gordillo, Partner Financial Advisor. I'm joined by Rich Lowry, Partner and Chief Investment Officer, and Gavin Gawicki, Portfolio Manager. For just a moment, from a word from our sponsors, please. Okay. Afternoon, Gavin and Rich.
Hey,
Good
Matt.
afternoon, Matt.
So as we start every month, I see a lot of green on the screen, and maybe Gavin, you can give us an update and let us know how we use this report for our market insights.
Yeah, so this is the market insights that comes out in PDF form at the beginning of every month. And we thought this time we would just pull up the shot and a clip of it on the screen here and just kind of go through this first paragraph, which is a pretty simple layout of what, we're thinking going into any given month. And to start October, we saw some key neutral signals across global macro change the market regime leadership to Goldilocks, which is a risk-on stance for the markets. What we called out is that we could see the potential for inflation plateauing and creeping higher into the end of the year, which would potentially change the market regime to a reflation or an inflationary regime, causing the Fed to potentially, not do all the cuts that have been priced in. We thought that this could be challenging to the momentum that we saw in bonds, which has proven to be, correct for the first couple weeks of October here. And also backing up that thinking was that our commodity signal has been, bullish to neutral since April and kind of was defiant in deflation back in the summer, trying to gain regime leadership over Goldilocks. So that's just kind of the summary. This comes out at the beginning of every month, and it's just a helpful, piece for clients to read, so they're just caught up to speed with what's going on.
Well, thank you very much, Gavin. I can see, boy, lots changed throughout the year. And maybe, Rich, you could touch base with us on, the last time we met, it was prior to the September Fed meeting, and there's been some big news since then, and maybe how it's affected our current market regime and maybe even our shorter term outlook. So the second half of the report kind of touches on that, and maybe you could add some color around that.
Yeah, last month we had kind of a battle between, quad one and quad four. The common factor on the left-hand side, the two quadrants on the left-hand side, are inflation slowing. As things have evolved, quad one has taken the lead. So you've had better performance from the equity components. You've had volatility kind of tamed down, notwithstanding now that we're in the 30-day window for the election, the implied volatility readings are higher, but currency volatility is relatively tame, bond market volatility is relatively tame. And that's shifted the regime toward quad one. So for the time being, we're investing as if we're in a quad one regime, which is, a risk-on environment. You get paid to take risks, so we should take it. Interestingly, the grid or the outlook over the next couple of quarters shows that this is likely to evolve into quad two. Our estimates on both growth and inflation are above consensus. So from a nowcasting perspective, we think this quad one is going to evolve into a quad two. And if our estimates are more accurate than consensus, which they have been pretty consistently, the street is going to have to revise their growth estimates higher and their inflation estimates higher. And the combination of that, could create, even more of a quad two theme. So once you get out further, we see inflation reaccelerating pretty much all next year. And that's not a consensus view. Consensus calls for inflation to slow and do a perfect landing right on the Fed's 2% target, and for growth to slow and do a 2% perfect landing right on the Fed's target. And we don't quite see that. A quad one current regime leadership followed by, what may look like a quad two environment, is probably, rally into year end. And then, every month, every day we take a fresh look at it. So by the time we reconnect next month, we'll have some further evidence whether that solidifies or not.
Well, that's very exciting, Rich. Boy, it's sure refreshing to talk about quad one and quad two versus the likelihood of us entering a risk off quad four environment. But it's great that we can be nimble for our clients, no matter what environment that we're in. And I hate to. I'm just thinking, by the next time we meet, there's going to be a new president elected, and I'm sick and tired of the commercials and flyers and everyone, but I'd be remiss if we didn't talk about like any last minute thoughts or comments around the election as it goes for investors, and any food for thought that we should keep in mind as we approach November before our next meeting.
I mean, I would just say that, the election in general, politics in general, has no bearing whatsoever on the investment process. Everything that we do is driven by growth, inflation, liquidity. Somebody is going to win, and that next president is likely to have some impact on growth, inflation, and liquidity. Whether it's positive or negative, we're pretty sure it's going to be reflected in our signals. And, we know we have the flexibility in our process to go, either way. So, if a worst case occurs and a president has a negative impact on growth, a negative impact on inflation, negative impact on liquidity, we're pretty sure we're going to see it. We know we have the flexibility to deal with that. And from my point of view, that would be a welcome opportunity. That's, really where you're able to differentiate, is during adversity. And likewise, if that same president, on the other hand, had a positive impact on growth, inflation, liquidity, pretty sure our signals will pick up on it. And we know we would have the flexibility to, take advantage of that as well. So, it doesn't, we hear a lot in the press that, oh, if this person wins, it's going to mean this and this and this, and if this
Right.
person wins, and who knows? I mean, I think they're just saying that to get, clicks and eyeballs and viewership and stuff. Like, nobody knows what the next president's going to be able to do. They have to get legislation passed. It's, you could probably spell out tendencies, but from an investment standpoint, you don't get paid in units of being right on policy or legislation. You get paid in risk adjusted returns. So whatever they do is going to flow through to our signals, and we'll be prepared to go one way or the other, and even back and forth if we have to.
What a great answer. On our market insights piece, I don't see anything that says election outcome results. So I'm glad to hear you say that response that you did. I kind of brought that out of left field on you, but I felt like we had to discuss it a little bit since it's going to be right around the corner. And guys, I really appreciate your time and insights today, and all of your guidance for our clients' assets. And look forward to talking to you next month.
All right, sounds good, Matt.
Thanks, Matt.
All right, take care.
Bye-bye.